What is up, guys? It's your boy No Risk, No Premium, back with another episode of the Sunday Sermon. Guys, first off, what is up and what is happening? Hope you had a very nice, enjoyable weekend. Hope you're having a very blessed Sunday thus far. I know I am. Forever grateful that we get to take on the market every day is truly a blessing. But guys, today doing a pre-recorded session for you guys. Typically, we go live with our Wolves of Wealth Discord community and go through an actual live Sunday sermon with a chat, interact, ask question, go through levels, etc. Today, we're just going to go ahead and do a pre-recorded version and get this out to you guys as soon as possible to get you guys prepared for tomorrow's market action. So without further ado, how we like to start this off is obviously go over here, check out the economic data. Why is that important? It's good to know when the market is going to have major events, job data, Fed speakers, etc. This week, though, this week looks very quiet. Like Tuesday and Friday supposedly have nothing scheduled here via Market Watch. Obviously, throughout the week, we check the economic calendar via investing.com, but just for a broad overview on Sundays, you like to see what's going on here because it normally hits the nail on the head for the main events going on tomorrow. Okay, tomorrow, U.S. services PMI factory orders and ISM services. All those come out 15 and 10 and 30 minutes after market open. Tuesday, a big nothing burger. Friday, nothing burger. Trade deficit, consumer credit on Wednesday, and Thursday is just jobless claims. So there's really only one data point this week being jobless claims that we're going to want to pay attention to. And that is on Thursday. A little eerie that there isn't a lot of data this week, but mainly what I think signed into effect over the weekend was the debt ceiling negotiations. So market opens up here in about an hour and 34 minutes. Will be interesting to see how we react. Do we get a gap up? Is it a sell the news? I truly don't know. Okay, I truly don't know. Before this week, jobless claims really going to be the only data you're going to want to pay attention to. Obviously, every single day, check investing.com the night before to make sure nothing pops up on your schedule in case there's any surprise speakers or anything like that coming out. Now, onto the charts, guys. Onto the charts. Look, breakout opens up 42.60, 42.80. We had it Thursday, closed here. I said, if we get through the highs, 42.60, then 42.80 comes. We got it. Basically got up here to almost 4,300 even. Okay, almost to 4,300 even. So on ES, okay, ES, basically the bulls are going to want to hold any dips back down into the 42.35 to 42.40 area. Okay, for this breakout to continue. I think it's more than likely we just see a third bar continuation that gets us up to this 43.27. I think this is initially a safe area to reject. If you're playing futures, I think you could grab at least 5 to 10 points here off the reject, anywhere from 43.25 to 43.30. Okay, but if not, let's say we just boot, scoot, and tootin' all the way up. Hey, break and hold above this level easily opens up 43.70. That's another 40 points above there. Okay, so watch for you to play this initial reject here. Is what I'll be watching. We'll call it 43.30 area. Okay, 43.30. Watch for a possible reject and then a back test of a breakout area. This 42.50, 42.60 area was a level of interest, but I do think if we want to get all the way back down, watch 42.40 to 42.50 area as well. It will just be watching to watch a bottoming pattern formation there for a higher low, obviously, and then a move higher. So watch the back test anywhere from 42.50, 42.60, all the way. I mean, 42.42, guys, you got to be a trader at this point. You got to be a trader. It's not going to go perfectly to a level every time. It might dip down to only, 42, maybe it's only 42, like 75. I don't know. But watch for your higher low pattern, okay? But I think more high probability trade could be also taking a break and hold here. 43.30 taking us to 43.70 above there. That's ES, guys. SPY going to look very, very similar because obviously SPY is the cash ETF of ES, which is the futures contract. So look, the only thing I think this is why I think we could get that pullback on ES is because we have, okay, because we have, let me now edit this yesterday low of the day. I don't want to show it, but it's a level. I think we could come back down here, test that 424 and fill this gap down to 423. But if not, Okay, if not, you're going to want to watch this small gap in here at about 425.50 area for the back test, right? That would be like that 42.40 to 42.60 area on ES, right? That would be that equivalent. This 425.50 area. Okay, this 425 area. Right? So look, above this area, if we have any dips into here, right? Watch 427, but obviously I think 425 would be easier. We could fill the gap down to 423. So there's a lot of areas that are of interest down here, or we can simply get the break and hold of 431.75. That is this big level here as we take it back. Okay, and I'm going to zoom out just a tad more so we can get a level to the upside right there. Okay, as we can see, huge level here that we're going to be approaching 431.75. There is, I highlighted it, right? I highlighted it. So this whole area in here, starting at 430, basically, and all the way up to 431.75 could be an area of interest for us to reject. So initially look for rejects in this area, but a break and hold above 431.75. You can ride that all the way up to 435. Above there, you're going to look at 438, 435, 438 above. Okay, so I'll be watching any pullbacks into this 425.50, 424, or 423 to have that higher, or have a bounce or even a higher low if it's above, right? Being at 425.50. That'll take us up. A break and hold of 428.50 could take us to 430, 431 from there. Obviously at 431, you'd be looking at the reject, 431.75 area, break and hold above 432, target 435, then 438 above there. QQQ. QQQ. Let's take a peek. Still in breakout mode, right? Still in breakout mode. Remember we talked about it last week. Why would you try to short something with strength when rather you need to just watch to see where you could buy the dip? Look at the pattern. Pattern has been very similar here. Rip up, pull back, rip up, pull back, rip up, pull back, rip up, pull back. Rip up. Okay. So if we, I mean, look at it, it's doing it over and over and over. How many people I see trying to short this thing? And I'm going, this is like the bull run of 2021. Like there's no need to short this thing. You just need to understand the trend. The trend is up. The higher probability is taking the long on the pullback, right? Taking the long on the pullback. But there is a huge gap to fill here. A huge gap to fill here on the Qs, right? On the Qs, where I think we could get some slowing / rejection. Obviously, 357, we can see almost where we topped out here on Friday. Not quite, though, but 357 is the beginning of that gap. I would think if we get through it, the reject would be at this 360 area. 360 area. Now, break and hold of 360. I mean, we are running back another 8 points up to 368. So a lot of room to continue running. Are we going to get a more major pullback? Maybe. Look, we are getting a little hot on the RSI. Something to take into account, right? Something to take into account. Okay, so watch for a break and hold of 350. Basically, the break and hold of yesterday's high or Friday's high could take for a gap fill up to 360. Okay, up to 360. I think there's a reject play here at 360. If we break above 360 and hold, then you target 368. Okay, then you target 368. Obviously, this thing's been running. Everybody thinks you're going to get a rug pull, et cetera, et cetera, et cetera. Well, it hasn't happened. Right, it hasn't happened yet, so you need to play the trend. I think as long as we stay above this 350 area, okay, as long as we stay above the 350 area, okay, 352, 353 are pullback areas you could target, right, to see if we can get dip buys to get bought up from there. Not until we break under 346 would I be really worried for a deeper correction. Than I think 340 would come after that, which I believe, in my opinion, is a long level at that 340, right? I think this area is a definite long level. Why? Basically, it's almost a breakout from 338 to 340 here. I would think there's a small gap to fill here as well. This could be a easy long level at 340, but you can't, it's hard to be bearish if we're above 346. Hard to be bearish if we are above 346. See, now I want to activate this, right? Now I want to put it here. And what do I want to say? I want to say, yesterday low of the day, right? Because that's a big level. Well, not lewd, low, the best low of the day on the right. Boom, bang, boom, bang. I like to make these ones solid. There you go. There you go. Just know that 350 psychological is a level, but really, I'm thinking that the long level is 346, 340 underneath there. If we get down there, right? 352 holds though. Get out of the way. Target 5650 or whatever, 356, right? It was pretty much this high of the day. There's a gap fill from 357 all the way to 360. Big gap to fill. I think you could have a rejection up here at 360 or a break and hold would open up 368. So way up there. Okay, this is overextended. It's getting a little hot, but let's see. Remember, RSI is a relative strength indicator. It shows the strength at which the stock is moving, not at where it needs to reject or where it needs to bounce, right? So just because it's hot doesn't mean it can't go higher. Okay, but it can't go higher. But for me, if you're getting hot like this, you really want to be breaking hold of the previous day high for that continuation to the upside for bulls to be the new money long when you're in a super hot uptrend, right? That's just the extra confirmation. Okay, that's just the extra confirmation. Or buying the pullback is always good too, because you allow things to cool off a tad, but you have to be patient. You have to be patient. All right, that's QQQ IWM, the red-headed stepchild risk on indicator. Look what we got here, ladies and gentlemen. I do believe, what did I say on Thursday? I said if we get above 179, 180 on IWM, that is a showing, a meter for the broader markets to think you just want to look at calls on SPY and QQQs. How many times have I told you guys, if the IWM is running or cratering, you likely are going to be doing that same trade, okay, on the broader markets. Now there is a gap to fill down here, but we knew we gapped up, held above the 177. That's how we knew on Friday only to look at calls. Okay, on SPY and QQQ, which we took in the Wolves of Wealth Discord. Okay, but now look, we filled this gap up. So if we filled the gap up, I would think any back test into 179, 180, right? Balance area. This is the balance area. Wouldn't it make sense that if we back test into the balance and make a higher low that we could continue on up higher? Look how much room we have to run now, right? I would do here and I would do here. 185, 187, right above 182. That's a lot of room to run on IWM. So I'd want to pay attention there. Want to pay attention as long as any dips above 180, 179, 180. Get bought for a higher low. You're really only going to be looking at the call side for the broader markets. Now, if we do a fake breakout, where let's say we either gap down underneath, back below, or we just have a huge red bar down and we close the day underneath 179. That is a huge red breakout. You can look at the rest of the broader market, i.e. SPY and Qs, if you trade them, and see we're likely going to be getting a pullback there. But as long as we're above 180, baby, it is call time and it is off to the races, to the upside. Seeing IWM, huge squeeze opportunity here on IWM. Also, this huge squeeze opportunity where not SPY U, but SPY. We have a huge red bars, and it's the same thing on ES. So we are poised. We are poised here for a huge breakout. We can see here on ES as well. So, guys, just because you want the market to go down doesn't mean it's going to go down. Just because you say, oh, well, the news and the debt ceiling and the government spending and inflation and rates and the Fed and this and that, and they don't give a fuck. They don't give a fuck. The market doesn't give a fuck. It's told you it doesn't give a fuck. So you should stop giving a fuck. You are not a macroeconomist. Okay, you're a trader. You are not a predictor. You are a professional reactor. Okay. If you're constantly taking puts and getting burnt, your bias is heavy and you need to step the fuck away from the computer and get your head right. It is easy to see what's going to happen. Okay. When you're in the market and you see either previous day low holding or previous day high breaking, and you can understand that more than likely, since the market doesn't want to go down, it's telling you where it is going to go. Sometimes when the market isn't going somewhere, it is telling you where it wants to go. Okay. In this case, it's up. In this case, it's up. Now, SPY and ES are going to be facing some major, and QQQL are going to be facing some major levels to the upside here soon. So you'll want to pay attention. IWM obviously has a little bit of room to run, which, gives you a little bit of hope for the, QQ, the NASDAQ and the S&P, that they can continue this trend on up. Guys, remember, always play the chart, not your heart. Market doesn't want to go down, so we're going to go up. It's very simple. Don't overcomplicate it. Don't let your bias get in the way. Other than that, guys, I wanted to keep it pretty short, sweet, simple, to the point, and set you off on your Sunday to have a great rest of the day. And as always, you got to wake up early, get your levels right, and of course, don't do anything fucking stupid. We'll see you bright and early. Peace.